episode of the Miracle Marketing Podcast, where we bring you interviews from business owners, celebrity guests, and hot topics. I am your host, Brandon Adams, along with my co-host, super producer, Big Perion. Big Perion, how's it going out there in the ATL this morning, sir?
Man, it is cold. It is very, 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 very cold. And they say it's supposed to get colder next week. So hopefully we can heat it up with this show today.
Oh, we definitely gonna heat it up with this show today. It's a little chilly out here in Vegas as well, but Vegas is usually a little chilly at this time of the year, but we gonna keep it hot. So I want my subscribers to make sure you hit the subscribe button so you get the notification. And if you would like to be a guest on the show, send us an email to amiraclepodcast@gmail. On today's show, you're going to get some financial advice, and what everybody loves to hear is how to make money, save money. So we have a special guest on the show. His name is Mr. Ronald Richardson. Mr. Ronald Richardson, how are you doing this morning?
Man, I'm doing good, and thank you guys for having me this morning. It's cold here too. I'm in Central Virginia, and
Okay.
yeah, so near the mountains. So it might be just a little bit colder than where you guys are, but we're hanging on. Me and my wife and a couple other friends. We're going on a cruise this weekend, so we definitely gonna heat it up. So we're gonna get the beach for everybody. So if you're not on the beach, then we're gonna get enough beach for all y'all.
All right.
Yes, sir.
Yes, sir. So, Mr. Richardson, for
Yes.
those who have not heard of you, tell us a little bit about you, what you do, your story, and our viewers would like to hear from you.
Yeah. Well, that's a loaded question, but of course I'm gonna answer that to the best of my ability. So my name is Ronald Richardson. As I said before, I live in Central Virginia in a place called Lynchburg. So y'all don't get nervous. I'm okay. In Lynchburg, I'm all right. So, but if you're familiar with Liberty University, it's the largest Christian school right now, and it's constantly growing. So most people know what Liberty University is. So that's the city that I live in. They actually also too, they had a big year in football. So if you haven't heard of them, hear them pretty soon. They're gonna be playing Oregon, University of Oregon on January 1st. So shout out to LU. But that's not what brought me here, actually. I'm from South Carolina originally. So I'm familiar with Atlanta. Been to Atlanta plenty of times growing up because I got family down there in Atlanta. So grew up in South Carolina, moved here probably about 8 years ago. And I actually moved here for a sales position. So I got a sales job. They moved me up here. And shortly after that, I started working in the banking industry as a banker. I've actually kind of been avoiding the finance industry for a little while. I'll probably say maybe about 12 to 13 years I was avoiding it because it's stressful dealing with other people's money, and I had that stigma in my mind. Oh, I don't want to mess up anybody's money because my granddad told me growing up, there's 3 things you don't play with. You don't play with my woman, you don't play with my food, you don't play with my money, right? So that's what he taught me. One of the things he taught me. So I was like, I definitely don't want to mess with anybody's money. But I had an amazing opportunity that God blessed me with. So I took advantage of that and I became a banker. And just coming in, becoming a banker. And the manager at the time, she hired me because of my sales skills. So it was a blessing that I did go through my sales experience and sales journey and come in as a banker. And it was interesting because I was one of the few Black bankers that I had in the bank that they had at the bank at the time. And not just bankers, they didn't have a lot of Black employees at the time. So I worked for the largest regional bank that is in Virginia. So the whole state of Virginia is the largest regional bank in this area. Homegrown throughout the state. So it was a lot of that. A lot of changes were going on. I would say that a lot of changes going on, and I came in at a good time. And most people, they get hired on as a teller and then work their way up. The Lord blessed me to be able to come in as a banker and really make an impact. And in a year and a half, I got promoted to a branch manager. So I was, running the bank, year and a half experience in the banking industry. But there's something that my manager told me at the time. She said that I can teach you the banking part, but you have the intangibles that I need. So the skills that you already have, I want to be able to use that, and you can learn the banking as you go. So that's what we did. So she poured into me about finances, about banking, about the history of money and things like that. So I really got an opportunity to learn as much as I could before I took the reins in leadership in that area. So I did that for several years. And then February of this year, I actually left the banking industry, left a good salary position, and really kind of took the reins on my own financial literacy business that I do. So I do financial coaching as well as financial literacy and financial consulting. So I really took the reins on that, and I took up a mortgage as well. So I'm a mortgage broker. So it was kind of really of a tough decision at the time because, I'm not by myself. I have a wife. So it was my wife, and of course I had to consult with her. And if she's not comfortable with it, I'm like, listen, babe, if you tell me that you're not comfortable with me doing this, then I'm not going to do it. But she supported me. She backed me on this. And here I am today, sitting on this interview, trying to make an impact to individuals, not just through their personal finance, but also through entrepreneurship. If they have a small business. So I span through that range as well as youth. So I teach financial literacy to youth. So whatever finance you want to get into and talk about, that's pretty much my lane, except for when it comes down to investments, that's a little bit more of a liability. So that's a little bit deeper conversation, but anything else, I get into the finance world. That's me. I want people to be empowered, and I want them to be impacted. And I tell people I don't want this to be a race thing, but I feel like it's my responsibility, part of my responsibility. You can't unhear what you heard, and some things you can unlearn, but once you hear something, you're responsible for what you do next. So in my experience that I've gained in the finance industry, in the banking industry, I feel it's my responsibility to share it with those who don't know. And I want people to be educated about finance and want them to take control of their finances. So that's why I'm here.
Area.
I don't want to date the video, but during different holidays, I know it gets really stressful for a lot of people, trying to make ends meet, trying to, provide for their family and stuff. How do loans affect people during regular seasons opposed to holidays?
Yeah, that's a great question. Because I teach actually that loans aren't a bad thing. Credit isn't terrible. It's not a terrible thing. However, I do feel if you have to take out a loan to buy Christmas presents, we probably need to reevaluate where our priorities lie. And the reason why I say that is there are things and methods that are set up for you to be successful in your holiday buying, buying those holiday gifts, and where you don't have to take out a loan. So if it's not providing an asset for you, the reason why you need that loan, I recommend don't do it. Because anything that you do, you wanna lessen your liabilities and increase the assets. So I tell people and I teach people there's some things that you can do throughout the year, and there's something that your bank has and they can offer you to where you can actually save this type of money and save up money throughout the whole year, where it seems like you're not overwhelmed by the time you get to the holiday season, and now you're scrambling for a couple $1,000, $3,000, $4,000, $5,000, so you can buy your Christmas gifts or what have you. So there's things that you can do throughout the year, but what I've realized is that some people are so caught up in the moment, they're so caught up in where they are that they can't see in the future. So that's why they don't do it. All they know at that point in time is, well, I have to pay bills, so I can't put away $25 a week. $25 a week in a year is so minuscule compared to having to pay back a high interest loan. You know what I'm saying? And you're getting yourself deeper and deeper, and it becomes a cycle. So what I teach is when we talk about a current, and a current to me, when I think about current, I think about currency. Or excuse me, when I think about currency, I think about a current. And a current it happens and it occurs when you're in a body of water, like if you're in the ocean or if you're in a river or something like that, right? And if you are swimming against the current, they tell you not to swim against the current, number one, because if you swim against the current, you have the ability to drown. That current can overtake you and it drowns you. So that current is also a form of a cycle. So it's the same cycle that we play. You take a loan out during the holiday season, and then you have to repay it back, this high interest loan, and you're starting off 2024 behind. You're already starting in the red, or whatever the next year is, right? You're starting off the next year and you're already behind, trying to have to play catch up. And then once you finally get caught up mid-year or whatever that looks like, or you take the first few months, you've already lost all that time where you could have been saving money. You could have been doing something else, making certain investments on that money. And then it becomes just a cycle all over again. Because what people know, sometimes, unfortunately, we're just prisoners of the moment. They know bills are due at that certain present time. So they don't take the proper parameters or really sit down with somebody they trust and say, hey, I really do need help so I can get out of this cycle. So in the holiday season, I recommend, if we really need to take a look again at our priorities. We know we want our children to have a good Christmas. We want to buy things for our family members, but I grew up not having a lot on Christmas Day. So I can't speak for everyone, but at the same time, if I could go back and get some things, of course I would be happy. But it didn't change the outcome. I'm still here. I'm still grateful for what I have. I'm grateful for what my parents were able to get me in that time. So we just really need to reevaluate where our priorities lie when it comes down to taking out loans just to buy gifts that are going to be obsolete in a few months or a couple years.
I had a question. Oh, go ahead. Go ahead, Perry.
Oh, you good. Go ahead, B.
I had a question for you because I do a lot of research. Also, I just pay attention to my surroundings and just what's going on. And I'm starting to see where money is starting to become obsolete. And then I do a lot of reading, and I was even watching some interviews with Robert Kiyosaki where he was talking about how the dollar is going away, the market is going to crash, and we need to start, looking at other ways. And I go to Whole Foods a lot, and I do shopping there for just like natural products and things of that nature. And just growing up, my grandmother always talked about, things from the Bible and things that she would always instill in, say from the Bible. And then come present day, those things are there because you can walk in Whole Foods now and start paying with your palm.
Yeah.
So have you seen that?
Yeah, I've seen videos of people, doing that. Yeah, absolutely.
Yeah. So where do you see the actual dollar going within the next 5 to 10 years?
Man, I was hoping we would get to this conversation. This is good. I was hoping we would get to this. So contrary to what we see in the news, because we could talk about news all day, right? And sometimes
I don't watch the news because that's fabricated material.
Exactly. That's kind of what I'm getting to. I was under the impression that obviously the dollar is kind of becoming obsolete, as you said. It's losing its value every minute of the day, seems like. But I don't see the dollar going away anytime soon. And the reason why I say that is because there always has to be some sort of way for us to exchange goods for service. There always have to be some sort of medium that we have to use that exchange, and that exchange for us is going to be the dollar. So if it was anything globally that were to happen, I'm not saying that it will, but if it does, then we have to account and think of, okay, if electronically we don't have any other way to purchase, because you can purchase everything online now. Purchase online, you can go in. I use Apple Pay twice this morning before I got on this call because I had to make a couple purchases. I use Apple Pay twice. So it's more and more they're taking that dollar bill out of our hand. However, more and more I feel like that is the reason why we should go in the bank and at least have something stashed away, because there's going to come a point in time, even if it's temporarily, there may come a point in time where our funds will be tied up electronically and we can't do anything. So that's why I say the dollar bill, I don't see it going away anytime soon. Just because there's still going to be a need for it. There's still going to be a need for it. People are still going to take their precautions. And unfortunately, it is those older individuals, you know, like my parents, you know, grandparents, who still use cash. You know, my grandparents probably don't even know, they know what a debit card is, but they still use cash. So as that kind of slows down, then we'll probably get into, okay, the virtual currency is in full effect. But I think it's gonna be a long time before we even get there. That's just my opinion and the way I've seen things trending. Even when I was leaving the banking industry, they're not in a hurry. Banks aren't in a hurry to let go of that dollar bill.
So let me ask you a question. So I think it was right around the time before the pandemic, which was 2020. We're going in 2023, almost in 2024, where you saw Bitcoin and all of that had reached up to like $75,000 per coin.
Yeah.
Then it did a huge nosedive.
Mm-hmm.
And it's been nosedive for probably a few years now.
Mm-hmm.
You look at Bitcoin now, it's right at around 40,000.
Yep. It's making that climb. It's making that climb back up.
Mm-hmm.
And Bitcoin, honestly, you know, those forms of virtual currency, that's why I say the dollar bill is going to stick around, because they haven't totally figured it out yet how they can fully control it. Because Bitcoin isn't as secure as people think it is, at least not yet. So once it gets a little more secure to where they can get a bigger hold on it, or the government can get a bigger hold on it, then I think we can have the conversation of, okay, the dollar bill is probably going to be going away soon. But I think they're a little ways from doing that now. But trust me, they're working on it.
Bitcoin is well, every currency has to have something that is supported by, you know, like most currencies are supported by gold or some type of natural resource. What type of resource does Bitcoin use?
See, that's the thing. That's what makes it so difficult, because Bitcoin is electronic, and because it's electronic, it's scary to think that there's one man or one person that created this, and they have control over it. So that's what makes it so scary, because there's really nothing that's backing it. So it's honestly like it's not really of any value anyway.
Okay.
I mean,
it's funded by investors, basically, people buying into it, and they use that money as weight.
Exactly.
Okay.
Exactly. So that's kind of what it's a catch-22. So I understand the concept of it and why people do it and use it now, but it also can be dangerous too. So that's what makes it dangerous, though, because there's no natural resource to be able to back it, you know. So what we kind of see is, and this is what I teach in my courses, is that if we understand that all money is, and currency is just a way for us to exchange one thing for another. You know, it's if I am Johnny, if I have a tractor and you need your farm plowed, you know, I can plow your farm, and then you give me the vegetables when it's time for the vegetables to, you know, to grow and produce and all that type of stuff. You give me the vegetables I need. That's an exchange. Instead of us using money, we made an exchange. So that's all money is just an exchange for a service or a good. So once we understand that, then it kind of makes things a little, we don't put so much power into the dollar bill or into the currency when we understand it's just an exchange. So, you know, that's just my thoughts on it. And like I said, it really can get kind of dangerous when we don't understand that, and it's driven by just a digital number that's on our screen or that's on our phones.
Okay. It's kind of like back in the day, you used to be able to barter just based on your word.
Absolutely.
And then they say, okay, well, people word isn't as good as it used to be, so you got to give me something tangible. That's how I mean, based on how you explained it, that's how I look at Bitcoin now. it started out as a bartering system based on words.
Yep.
You know what I'm saying? Digits or whatever. But there's gonna come a time where people gonna be like, okay, we just can't live off hopes. You know what I'm saying? You're gonna have to do something. Because I thought it was backed by something like natural gas or something like that.
Yeah.
But I guess that's just me looking into different words like Ethereum and all that different stuff, and whatever. But how I wanted to ask this question because the first time I was introduced to the word escrow was when I first purchased my first house.
Yes.
How do an escrow work, and can a person have an escrow outside of purchasing a house or something like that through the bank?
Yeah. So another good question, because one of my friends sent me a video yesterday and she asked me to address this topic when I get a chance. And it was a young lady who purchased a home maybe a couple years ago, and she didn't understand why her house payment or her mortgage payment went up the following year. And then she further found out it was because her property taxes went up. So escrow account, most people encounter it whenever they purchase a home, or whether it's your first purchase or whether you are investment, if you do investments, things like that. And to make it simple from that aspect, I just tell people when you're purchasing a home, your escrow is just simply your taxes and insurance. Uncle Sam is always going to get his, right? That's where our taxes come in. And then our insurance, because just like our car, our home also needs to be insured. If there's a fire, if there's a natural disaster that happens and you need repairs on your home, that insurance needs to be able to you need insurance on your home to be able to cover whatever that cost is going to be. So from a taxes and insurance standpoint, you have an escrow account when it comes down to your mortgage, where those bills in some states is going to be due twice a year. In other states, it could be due once a year, but they put all that money into an account where you don't have to worry about it. You don't have to take care of it if you don't want to. If you want to, you can. But typically, to make sure it gets paid, what that mortgage company would do is have a separate escrow account to where if your taxes is $50 a month, okay, we're going to take the $50 from your account and then we're going to put it here into this escrow account. And if your insurance is $120 a month, we're going to take that $120, we're going to put that here. And when it's time for that bill that's going to be due in June, then we're going to pay that bill for you. We're going to send it off to the county, send it off to the city for you to pay your taxes, and your insurance company is going to get their piece too. And then we'll do the same thing in December or whatever the frequency of that particular state or county. But what some people don't understand is that can actually fluctuate. Even though the mortgage payment, yes, you would rather do that over a rent payment, and your rent is constantly going up, but your mortgage can go up too because of the property taxes. So if your house appraises for more, if your house is worth more, which is what you want to do, you want the value of your home to go up. Once it goes up, then more than likely that property tax can go up as well. Now, typically it doesn't go up a whole lot to where you have to pay a couple $100s more, but sometimes it does take a drastic jump, especially since the pandemic, where you've had people paying, $50,000 to $100,000 over the actual value price of a home. So that those purchases in that neighborhood or in that area is going to cause your value, your home, to rise. Of course, you want that to happen, but at the same time, you're going to have to pay the price too. So your house is worth more, but Uncle Sam can also tax you more for that. So of course you can have a separate escrow account to where, again, you can manage that if you would like to. Most mortgage companies don't want you to do that. So they wrap it all up into your mortgage payment. So you got your principal and interest out of the $300,000 that you borrowed from them, principal and interest, and then you got the taxes and the insurance, which now you got a payment of $1,800 a month. So all that combined is your house payment. Of course, again, if you wanted to get your escrow on your own to manage that, which I don't recommend, but if you would like to do that, you can. Some business owners decide to do that, and they have to do that, especially if you do a lot of flips. if you do a lot of flips, if you do a lot of purchasing and selling of property, then you got to have your own escrow account or separate escrow account. Also, certain settlement companies or attorneys' offices may have their own separate escrow accounts for that reason too, is because they need to be able to manage those things themselves because they constantly have the purchasing and selling of properties. So I hope that makes sense for whoever's going to be watching, but I hope that makes some sense or brings some sense to what escrow is.
Yeah, it made sense to me. And it just opened my eyes to a lot of things because I thought it was basically like a savings account that they put some extra money in, just to just to keep you, on your feet a little bit longer until you able to take over, and do it yourself. Because man, these property taxes are something else.
But what's interesting about what you just said though, is that some people don't realize with that escrow, even though technically it's your money that you are putting into this account, I guess, or has been put into this account, it's technically not your money because you want it to be set up that way. You want it to be set up to where you don't have to worry about it. So you don't get a bill for $600 in June saying you have to pay this to the county for your property taxes, or at the end of the year and it's $1,200 you got to pay to the county. And you thinking, well, they didn't tell me this when I bought a house. They didn't tell me I would have to pay all these different things. So you kind of want that. You want to be able to say, hey, well, I don't have to worry about anything because it's all taken care of.
Now, Ronald, I wanted to talk to you about what you call the exit strategy. We're running short of time, so can you tell us briefly about the exit strategy?
Absolutely. The exit strategy is a program that I actually created for teenagers initially. So I'm a youth pastor in my city here at my local church, and I, impact some kids in my city. And I started it in 2020 when I was managing the bank in the height of the pandemic. And this was probably around November 2020, where they were slowly kind of giving us some regulations and say, hey, you can gather, but it has to be a maximum of this amount of people, and you have to keep your social distance and all of that, and mask and all of that, hand sanitizer, right? So I started that because I wanted them to be able to do something. I said, we can't leave this year without not doing anything. We've been stuck in the house for months. Let's try to do something and get together. But I just didn't want to do that. I wanted to teach them how to be good stewards of their money, but not just how to be good stewards of their money, but how to be good stewards of their gifts that God gave them. What is their passion? Even if they don't understand what their passion is, that's fine. But at least give them some sort of direction of where they need to go, or where they would like to go, or where they would like to see themselves. Give them some sort of purpose, So I gave them I gathered my wife and then some other professionals. I partnered with the local Mercedes-Benz dealership, and a couple other people that were real life professionals, excuse me, so they can come and they can give them a real life experience on what to expect in the real world. So we had stations set up. So I gave them a random occupation, and I gave them the salary with that occupation, and I gave them a random credit score. So if you were a doctor, you get your salary of 6 figures, but your credit score might be a 600, because I've seen that before. Just because, and I also taught them, just because you have money or you have a certain amount of money doesn't mean you know what to do with your money. I've had several clients that came into my office that were wealthy clients, but they didn't know how to manage money. They didn't know what to do with money. So we did that, and I taught them how to not only manage their money, but again, provide them with purpose. And then I expanded it that following year, and then we had even more children. So we started off with about 30 to 40 kids. That next year we had about 50 to 60. So now we just did it this past year in 2023, and we had a record amount. So about 75 to 80 kids that were there. And next year we're expanding to hopefully at least have about 100. But this year was the first year I opened it up to adults. So I actually was down in Atlanta doing the same program for adults and children. But then I was thinking, okay, well, how can I actually reach our adults in a different way, but still provide value and still give them a strategy so that they can exit out of their financial anxieties? So I came up with the Exit Strategy Challenge to where it's a virtual event where adults and entrepreneurs and small business owners, they can join my challenge, and it's a week long. So they spend 1 hour with me 5 days out of the week. So Monday through Friday, they just have to commit an hour, and I record those Zoom sessions. So we meet up on Zoom, and I have topics for each day that I cover on this challenge. So the reason why I call it a challenge is because I also give them homework, because I don't want them just to go through it, just to go through it. I actually want them to get something out of it. I want to challenge them to see where they are financially, because I want them to grow. I want them to be successful. So we talk about credit.
Ronald, you still there? Ronald? All right, seemed like we lost Ronald. Hopefully he'll be back on shortly. Perry, I still got you, right?
Yes, sir. Yes, sir. I'm here. I'm here. I didn't
Okay.
say God enough in this interview. So I want to get a Lord praise and thank him for us just existing and being here today, man. It's important, especially based on the things that we need in this season to help us survive and stuff. And he mentioned some things about having a vision and stuff like that. So and just moving out of being a working for somebody and going into where his vision is, and doing it for himself, and how he elevated because he trusted his gift and the information that he had already had, and he had support from his wife. So I think, just like with anybody, especially all of the people that we have on our show, everybody takes that leap, to go into what they believe is their calling. Just like us, we have this podcast. This is a way of us going into something that's a part of our calling, to be able to reach others and educate others and help other people get information that they may not get on a daily basis.
Yeah, and it's kind of the same thing, like, when we first put this together, what was it? We kind of were talking and just shot the idea to each other and said, let's do it. It was more of a vision. I didn't know actually how it would go, but so far we've had some pretty good guests and got a lot of good information, and people have been receptive, and I just see it growing. So it's all about having a vision and those things. Um, with having a vision, you can do so much. If you don't even think or plan or have any goals or anything, it's just a wish, but you got to start implementing and putting some things into existence. And kind of like he was saying, during the pandemic, it was just challenges he did for children. But then he also started having it for adults, because a lot of times adults don't even know how to manage money, don't know anything about money, don't know anything about investments. People, and like he was saying, people get caught up in the holidays. I don't get caught up in the holidays because it's just another day. And when that one specific day is over, them bills are still still gonna be there. And like he
Yeah,
said,
Santa Claus ain't paying no bills.
he ain't paying no bills. And rent, mortgages, gas, it's winter time. So when you get that bill, that heat bill is gonna be higher. It's just different things, man. So you can't get caught up in the hype. You just gotta, do certain things that you feel is still gonna, get some gifts. It don't have to be anything expensive, to let somebody know that you're thinking about them. I haven't forgot about you, but we still gotta eat and live and pay bills and the rest of the day. We can't get caught up in one specific day.
Yeah. It's very important to be financially literate and responsible with what you have and stuff, because we can get, we're influenced by social media and a lot of different things, news and our peers and stuff, and it can cause us to go into debt really quick because we're trying to keep up with everybody else. And even though sometimes a
All
person
right,
may
we got Ronald
personally
back.
be suffering.
Ronald,
I
got
apologize.
No
Um,
problem. We're running short of time. We have less than 2 minutes. So go ahead and plug where everybody can find you, follow
Yes.
you, get more information on your challenges. The rest of the time is yours.
Okay, yeah, absolutely. So you can follow me on Instagram and on TikTok, Ronald K. Richardson. And you can find me on Facebook, Ronald Richardson II. So I'll be doing another challenge in January 15th through the 19th. Again, I'll be covering things on credit, small business, entrepreneurship, your personal finances. And I went to Atlanta this year, just a small plug. Went to Atlanta this year, took a flight from Lynchburg to Charlotte, Charlotte to Atlanta, and back. And I only paid $11.40. So I want to teach people on how to do that. And what they can
Please.
do. I want to teach you how to do that. It starts at $99 to take the challenge, and I'm giving you everything. So the feedback I've gotten from this is that everybody has received more than what they put in. But you got to put something in. You got to invest in yourself. You know, I talk about investments with funds and monies and all of that type of stuff, but you have first thing you need to invest in is you. So once you invest in you and you change your mindset about money, there's no reason why you can't become wealthy. So that's what I do. I empower people to become wealthy.